Hey everyone, Bradley tuning in, coming at you with another video, a nice walk in the park, and a beautiful day to talk about mortgages because the qualifying amount just got hijacked, completely orchestrated by the big six banks, and I'm going to explain to you how. That's a pretty big claim, but it really isn't once you understand all of the facts. I'm going to talk about also how you can protect yourself against what they're doing to the Canadian consumer today. Before I get started, my name is Bradley Watson. We do these videos every week. Sometimes I walk through a park, sometimes I stand in houses, giving you the latest tips and tricks on what's going on here in the GTA real estate market. And today we're talking about these mortgages because the qualifying amount according to the Bank of Canada, has gone up from 5.14 to 5.34%. Now this is no surprise. What they do is they actually follow the benchmark rates of the banks. And because of that, the banks recognize, hey, if we can get these rates a little higher, then we can also manipulate the Bank of Canada's rate. And in fact, that's what they've been doing. But none of this makes sense until I explain one key fact, and that's this. The banks only need to use this qualifying rate if it's a new application. So for example, if you stay with the same bank, let's say TD, you don't need to qualify at this rate. You can continue to roll over on a renewal. But if you're looking to switch banks and go and compete in other areas, now you need to qualify on this benchmark rate. And so the banks recognize this. And so we're seeing that what they're doing is they're tightening, they're squeezing their clients, they're making it more and more difficult for you to have different options when you're coming up for renewal. Who was it that led it? Funny enough, it was TD Bank, and they have the most renewals coming up in this year, followed by RBC, who has the second most. It's a perfect playbook. Now, at the end of the day, we called this back in January. I know I like to talk predictions and I do it all the time, but in this case, I was bang on. You have to check out this video. I know I tell you guys check out cross-reference videos all the time, but in this case, please do. I did a video back in January called New Mortgage Stress Test January 2018, the consequences, and at the 4-minute mark, you can jump. You don't have to watch the whole thing, just jump to the 4-minute mark. You'll see we talked about this back in January, and if I could figure it out and share that with you guys, you don't think these big banks can figure it out? There's so much more money in it for them in order to squeeze their consumers and force them to stay, because they know if they can get that benchmark rate higher, then your chances of leaving them go down quite a bit. Let me know what you guys think. Let me know when you're coming up for renewals. I'd love to hear feedback. We're trying to get you guys the most information in an up-to-date fashion. So I'll see you next week with more tips and tricks. Take care and keep it real.